I've been saying the same thing for over a decade now. Cryptocurrency has no value. It produces nothing. It's a delusion wrapped in technology. And now, finally, the bill is coming due. I'm not happy about being right. I take no pleasure in watching people lose money. But what's happening in the cryptocurrency markets right now isn't a surprise. It's not unexpected. It's not some black swan event that nobody could have predicted. This crash, this complete unraveling of the cryptocurrency fantasy is exactly what I've been warning about since Bitcoin first crossed my radar. And we're not near the bottom. We're not even close. Let me be clear about something from the start. When I warn about cryptocurrency, I'm not speaking as someone afraid of technology. I'm not some old man shaking his fist at innovation. I've watched technology transform the world. I've owned stakes in technology companies. I've seen the internet reshape commerce, communication, and culture. I understand that. Technology creates real value when it solves real problems. But cryptocurrency doesn't solve problems. It creates them. And now those problems are coming home to roost in spectacular fashion. I want to take you back to 2017. Bitcoin was soaring. It crossed $10,000, then $15,000, then $19,000. The media couldn't get enough of it. Every dinner party had someone bragging about their cryptocurrency gains. Young people were quitting their jobs to trade full-time. The term hodl became a rallying cry. And anyone who expressed skepticism was dismissed as outdated, as unable to understand the future, as a dinosaur facing extinction. Charlie Munger and I watched all of this unfold with a sense of deja vu so strong it was almost painful. We'd seen this exact pattern before, different asset, different story. Same underlying psychology. The psychology of greed, overwhelming reason, of crowds convincing themselves that reality doesn't apply to them, of smart people abandoning everything they know about value because everyone else is getting rich and they don't want to be left behind. I called Bitcoin rat poison. Charlie called it rat poison squared. We weren't being colorful for the sake of it. We were being precise, because poison is exactly what cryptocurrency has been to rational investing. It's poisoned the minds of a generation of potential investors. It's taught them that speculation is the same as investing, that price movements matter more than cash flows, that stories are more important than earnings, that you can create wealth out of nothing if enough people believe in it. Every single one of those lessons is wrong, dangerously wrong. And now, finally, people are learning just how wrong. The crash we're seeing isn't a temporary correction. It's not a buying opportunity. It's not the market being irrational. This crash is the market finally, belatedly, becoming rational. This is reality reasserting itself after years of collective delusion. And reality, as I've learned over 94 years, is relentless. You can ignore it for a while. You can tell yourself it doesn't apply. You can create elaborate theories about why this time is different. But eventually, always, reality wins. Let me tell you what I look for in an investment. I want to understand the business. I want to see predictable cash flows. I want a competitive advantage that will last. I want competent, honest management. I want to pay a reasonable price relative to the value I'm getting. These criteria have guided every significant investment decision I've made for 70 years. They've worked through wars, recessions, technological revolutions, and social upheavals. They work because they're based on something fundamental. The understanding that value comes from productivity, from creating something that didn't exist before, from serving customers who willingly pay for what you produce. Apply those criteria to cryptocurrency, any cryptocurrency. There's no business to understand because there's no business. There are no cash flows because nothing is produced. There's no competitive advantage because there's no competition for anything real. There's no management to evaluate because there's no company. And there's no reasonable price because there's no value to price against. So cryptocurrency fails every single test of sound investment, not marginally, completely. But people bought it anyway. They bought it in massive quantities. They convinced themselves that old rules didn't apply, that we'd entered a new era, The digital scarcity was the same as real scarcity. That code could replace gold. That blockchain would replace banks. That decentralization would replace government. These weren't just wrong predictions. They were fundamental misunderstandings of how value works. And those misunderstandings are now being corrected in the most painful way possible. I want to walk you through what's actually happening in this crash. Not just the price declines, though those are dramatic enough, but the underlying dynamics, the psychology, the chain reactions. Because understanding this crash means understanding why it was always inevitable, why every warning I gave was based on sound reasoning, why this outcome was the only outcome that made sense. The first thing to understand is that cryptocurrency prices were never based on value. They were based entirely on momentum, on the belief that prices would keep rising. Early buyers made money. They told their friends bought. Prices rose more, media coverage increased, FOMO intensified, more buyers entered, prices rose further. This feedback loop created the illusion of a new paradigm. But it wasn't a paradigm, it was a bubble. The most obvious bubble I've seen in my lifetime, and I've seen quite a few. The second thing to understand is that bubbles don't pop because of a specific event. They pop because they run out of new buyers, because the pool of greater fools gets exhausted, because the last wave of speculators has entered and there's nobody left to push prices higher. That's what's happening now. The new money has dried up. Retail investors have been exhausted by years of volatility. Institutional investors are quietly exiting. The celebrities and influencers who promoted cryptocurrency have gone silent. The conferences are getting smaller. The media coverage is turning skeptical. And without new buyers, there's only one direction for prices to go. The third thing to understand is that selling pressure in cryptocurrency is asymmetric. When stocks fall, companies can buy back shares. Management can reassure investors, fundamentals can provide a floor, but cryptocurrency has none of these stabilizing forces. There's no company to defend the price, no management to make strategic changes, no earnings to anchor value, no dividend to provide return. When selling pressure builds, there's nothing to stop it. And once panic starts, once people rush for the exits simultaneously, the declines become catastrophic. I'm watching exchanges struggle with liquidity. I'm seeing funds suspend withdrawals. I'm reading about people unable to access their holdings. These aren't bugs in the system. They're features. They're the inevitable result of a system built on speculation rather than value. When everyone wants out at the same time, there's no mechanism to provide orderly exits because there's no underlying value to buy. No one steps in to catch falling knives when the knives aren't attached to anything real. Let me tell you about a meeting I had years ago with some young entrepreneurs, smart people, well-educated. They wanted to convince me to invest in cryptocurrency. They had charts showing historical returns. They had projections about adoption rates. They had theories about how blockchain would revolutionize everything from banking to supply chains to voting. I listened politely, and then I asked them a simple question. If I buy Bitcoin today, what am I entitled to? They looked confused. One of them said, I'd own Bitcoin. I asked what that meant. What rights did ownership confer? What claim did I have on anything tangible? They explained that I'd own a piece of code on a distributed ledger. I asked what I could do with that. They said I could sell it to someone else. I asked what that person would do with it. They said sell it to another person. I asked if anyone in this chain would ever receive something of actual value, something beyond the hope of selling to the next person. They couldn't answer because there is no answer. That simple thought experiment reveals everything you need to know about cryptocurrency. It's a chain of people passing around digital tokens, each hoping to sell for more than they paid, with no terminus, no final buyer who wants the asset for its productive capacity, no use case beyond speculation, no value beyond what the next person will pay. That's not an investment. That's not even a gamble. It's a psychological phenomenon, a mass delusion. And delusions always end. The crash I'm watching unfold has several characteristics that make it particularly severe. First, leverage. So many cryptocurrency holders bought on margin, borrowed against their holdings, used leverage to amplify gains. That leverage now works in reverse. As prices fall, margin calls force selling. That selling pushes prices lower. Lower prices trigger more margin calls. It's a doom loop, and there's no circuit breaker to stop it. Second, the concentration. A tiny percentage of addresses hold the vast majority of cryptocurrency. These so-called whales have enormous power over prices. When they sell even modest amounts, the market moves dramatically. And right now, they're selling not all at once. That would be too obvious. But steadily, systematically, getting out while they still can, while there's still some liquidity, while there are still buyers willing to catch their falling assets. The retail investors watching their portfolios collapse have no idea they're being systematically exited by the very people who promoted cryptocurrency most aggressively. Third, the contagion. Cryptocurrency created an entire ecosystem. Exchanges, lending platforms, funds, custody services, media companies, conferences. All of these businesses depend on high cryptocurrency prices and high trading volumes. As prices fall and volumes dry up, these businesses fail. Each failure creates more selling pressure, more panic, more loss of confidence. We're seeing this play out right now. Major exchanges laying off staff, lending platforms holding withdrawals, funds liquidating positions. Each headline erodes confidence further. Fourth, the loss of narrative. For years, cryptocurrency had powerful stories supporting it. Digital gold, inflation hedge, currency of the future, banking the unbanked. Every one of these narratives has collapsed. Gold went up while Bitcoin fell. Inflation arrived and Bitcoin crashed. No country adopted cryptocurrency as currency. The unbanked remained unbanked. Turns out they needed access to basic services, not speculative assets. Without supporting narratives, cryptocurrency is naked. It's just price charts going down. And price charts going down create their own narrative, a narrative of failure. I think about all the people who bought cryptocurrency near the top, not the early adopters who got lucky, but the regular people who heard the stories, who believed the promises, who thought they were securing their financial future. People who put their savings into Bitcoin at $50,000 or Ethereum at $4,000. People who borrowed to buy more. People who convinced family members to invest. These people are experiencing devastating losses, life-changing losses. And I feel for them. I genuinely do. But I also hope they learn from this experience, because the lessons are important. The first lesson is that popularity doesn't equal validity. Just because everyone is doing something doesn't make it smart. In fact, in investing, when everyone is doing something, that's often the worst time to do it. That crowds are right during the middle of trends, but they're catastrophically wrong at extremes. And cryptocurrency was the most extreme crowd behavior I've witnessed. Millions of people buying something they didn't understand because they were afraid of missing out. That's not investing. That's herd behavior, and herds eventually stampede toward the cliff. The second lesson is that technology and investment quality are different things. Blockchain might be useful technology. I don't know. I don't particularly care, because useful technology doesn't automatically create good investments. The internet was revolutionary technology, but most internet companies failed. Most internet investors lost money. Technology creates change, but change creates both winners and losers, and more losers than winners. Assuming that early adoption of technology guarantees investment success is a mistake that's cost people fortunes throughout history. The third lesson is that you can't create value through scarcity alone. Yes, Bitcoin is limited to 21 million coins. So what? I could create artificial scarcity in anything. I could declare that I'll only ever paint 21 million paintings. That scarcity doesn't make my paintings valuable. Value requires demand based on utility, on productivity, on what the asset does for the owner, beyond providing something to sell to someone else. Bitcoin scarcity is meaningless because Bitcoin itself is meaningless. The fourth lesson is that you need to understand what you own. Really understand it. Not just the story, not just the pitch, but the fundamentals. How it works, how it makes money, what gives it value, where the returns come from. If you can't explain these things simply and clearly, you don't understand your investment. And if you don't understand your investment, you're not investing. You're hoping. Hoping isn't a strategy. It's not a plan. It's just wishful thinking with money attached. The fifth lesson, and perhaps the most important, is that price and value are different things. Price is what people will pay. Value is what something is worth. These can diverge wildly for long periods, but eventually price and value converge. They always do, always. Cryptocurrency had price, enormous price at times, but it never had value. And now price is falling toward value. That journey isn't over because value is zero and price hasn't reached zero yet. I want to address something that cryptocurrency advocates often say when defending their investments. They point to the dollar. They say the dollar is also based on belief. The dollars have no intrinsic value. That fiat currency is a scam. This argument sounds sophisticated, but it's profoundly ignorant. And understanding why it's ignorant helps explain why cryptocurrency is failing while dollars endure. The dollar is backed by the United States government, by the largest economy in human history, by a military that can project power anywhere on earth, by a legal system that enforces contracts, by a tax system that creates mandatory demand. Every business in America needs dollars to pay taxes. That's real demand, unavoidable demand, structural demand that doesn't depend on belief or speculation. Bitcoin has no such demand. No one needs Bitcoin for anything. It's entirely optional. And when things get hard, optional assets disappear. The government also has strong incentives to maintain dollar stability, not perfect stability. No currency is perfectly stable, but relative stability. Because government legitimacy depends partly on monetary stability, hyperinflation topples governments. Leaders know this. So even incompetent governments try to maintain some level of currency stability. Bitcoin has no such incentive structure. No one is in charge. No one is accountable. No institution depends on Bitcoin's stability. That's presented as freedom, but it's actually abandonment. When cryptocurrency crashes, no one comes to help because no one has any reason to care. The government can also act. When the financial system was collapsing in 2008, the government intervened, injected liquidity, guaranteed deposits, stabilized banks. You might not like those actions. You might think they were unfair, but they worked. They prevented complete collapse. They restored confidence. They allowed the system to survive and eventually recover. Cryptocurrency has no such capability. When cryptocurrency crashes, there's no lender of last resort, no deposit insurance, no circuit breakers, no emergency measures, just falling prices and rising panic. I've built my entire fortune on a simple principle. Buy assets that produce something of value. Hold them long enough for compound interest to work. Stay rational when others panic. Be fearful when others are greedy. Be greedy when others are fearful. These aren't complicated ideas, but they require discipline. They require patience. They require the ability to ignore crowds and think independently. Most people can't do this. They want to be part of something. They want to feel smart by doing what everyone else is doing. They want the comfort of consensus. Cryptocurrency offered that comfort. You weren't alone. You were part of a movement, a revolution. You were early to the future. You were smarter than the old guard. You were going to be vindicated when cryptocurrency took over the world. That narrative was powerful, seductive, and completely wrong. Because consensus doesn't create value. Production creates value. And cryptocurrency produced nothing except volatility and false hope. I'm watching cryptocurrency advocates scramble to explain what's happening. They're blaming manipulation, pointing to institutions shorting the market, claiming this is a coordinated attack by governments and banks threatened by decentralization. These explanations are comforting. They imply that cryptocurrency itself is fine, that external forces are responsible, that if these bad actors would just stop interfering, cryptocurrency would resume its rightful rise. But these explanations are false. This crash isn't manipulation, it's valuation. The market is finally pricing cryptocurrency correctly. And correct pricing for an asset with no value is zero or close to it. Some advocates are pivoting. They're saying cryptocurrency was never about price, it was about the technology, about changing how the world works. This pivot is revealing because for years, price was everything. Price was proof that cryptocurrency worked. Price validated the vision. Rising prices were celebrated as confirmation. But now that prices are falling, suddenly price doesn't matter? This is rationalization at its finest. The story changes to protect the ego, to avoid admitting error, to maintain the delusion just a little longer. Others are claiming this is a buying opportunity, that crashes are when fortunes are made, that true believers should be accumulating. This advice is dangerous. Yes, crashes in quality assets create opportunities. When the market crashed in 2008, I invested billions, but I invested in businesses with real assets, real earnings, real competitive advantages, businesses that were temporarily mispriced but fundamentally sound. Cryptocurrency isn't temporarily mispriced, it's permanently worthless. Buying more on the way down isn't courage, it's throwing good money after bad. Let me tell you about a conversation I had with a young investor several years ago. He told me he'd made more money in cryptocurrency in 2 years than I'd made in my entire career. He said this with absolute confidence. No irony, no humor. He genuinely believed he'd outsmarted me, that his understanding of cryptocurrency made my decades of experience obsolete. I didn't argue with him. What would be the point? I simply noted that paper gains aren't real until you sell, and that selling requires finding a buyer. He laughed. There would always be buyers, he said. Demand was infinite. Cryptocurrency was the future. I wonder where that young man is now. I wonder if he sold, if he took his paper gains and converted them to real wealth, or if he believed his own narrative so completely that he wrote his gains all the way back down. If he learned that demand isn't infinite, that buyers disappear when sentiment changes, that the future he imagined isn't arriving. I don't take pleasure in these thoughts. I'm not gloating, but I do hope he learned something. That loss, painful as it is, taught him something about the difference between luck and skill, between speculation and investment, between temporary price and lasting value. The crash I'm watching isn't finished, not even close. We're in the phase where people still have hope, where they believe this is temporary, where they're holding because selling would mean admitting defeat. But that hope will erode, gradually at first, then rapidly, as months pass without recovery, as more businesses in the ecosystem fail, as more negative news accumulates, as the realization spreads that cryptocurrency isn't coming back. When that realization hits critical mass, when the last desperate holders finally capitulate, that's when we'll see the true bottom. And that bottom will be far below where we are now. Because the bottom for an asset with no intrinsic value can go very low indeed. Not literally to zero, perhaps. There might always be some speculative trading. Some true believers who hold forever, but functionally to zero, to prices where the total cryptocurrency market is irrelevant. A tiny footnote in financial history, a cautionary tale told to warn future generations about the dangers of speculation. I've been asked what I'd say to people holding cryptocurrency right now, people watching their wealth evaporate, people who believed the promises and are now facing devastating losses. My answer isn't what they want to hear, but it's what they need to hear. Cut your losses, sell, take whatever you can get and move on. Yes, you'll lose money, probably a lot of money, but holding won't change that. Hoping won't change that. The losses are real whether you sell or not. The only question is whether you compound those losses by continuing to hold a worthless asset or whether you salvage what you can and redirect it to productive investments. This advice sounds harsh, it sounds defeatist, but it's realistic. I've never sugar-coated reality. I've never told people comforting lies when hard truths were needed. Cryptocurrency is failing. This crash is the beginning of the end. The sooner you accept that, the sooner you can begin rebuilding, because there is life after cryptocurrency. There are real investments that create real wealth, but you can't access them while your capital is trapped in a failing speculative bubble. I think about opportunity cost constantly. Every dollar locked in cryptocurrency is a dollar not invested in something productive. A business that generates earnings, real estate that produces rent, bonds that pay interest, index funds that track economic growth. These investments aren't exciting. They won't make you rich overnight, but they work, they compound, they build wealth slowly and steadily. They're how real fortunes are built, not through speculation, not through hoping someone will pay more tomorrow than you paid today, but through owning productive assets and letting time do its work. The crypto crash I've been warning about is here. It's unfolding exactly as I predicted. Not because I'm brilliant, not because I have special insight, but because I understand something fundamental about value, something that hasn't changed in centuries and won't change in centuries to come. Value comes from production, from creating something that didn't exist before, from serving customers who willingly pay for what you provide. Everything else is noise. Cryptocurrency is noise. Expensive, destructive, all-consuming noise, but still just noise. This crash will teach millions of people a painful lesson. Some will learn it. They'll emerge wiser, more cautious, more focused on fundamentals. They'll become better investors because of this experience. Others won't learn. They'll blame external forces. They'll convince themselves they were just unlucky. They'll find the next speculative bubble and repeat the same mistakes. I can't control which group you're in, but I can tell you that the choice matters. That learning from failure is how you avoid repeating it. I'm 94 years old. I've seen more market cycles than most people can imagine. I've seen bubbles inflate and burst. I've seen fortunes made and lost. I've seen people make every possible mistake and some impossible ones. Through it all, one truth remains constant. Price eventually returns to value, always, without exception. Cryptocurrency had price without value. This crash is the correction. It's not pleasant, it's not easy, but it's necessary. It's the market teaching a lesson that should have been learned long ago, that you can't create wealth from nothing. That speculation is an investment. That crowds can be wrong. That old principles still matter. The crash is here. It's real, it's severe, and it's not over. But for those willing to learn, for those willing to abandon failed ideas and embrace sound principles, there's still time. Time to exit, time to redirect, time to rebuild. Not quickly, not easily, but sustainably, in ways that last, in ways that create real wealth rather than paper gains, in ways that would make Ben Graham proud. That's my warning. That's my advice. And that's my hope, that this catastrophic crash, painful as it is, teaches lessons that stick, that create better investors, that prevent future bubbles, that restore respect for the fundamental principles of value creation, because those principles, boring as they might be, are the only principles that work, the only principles that last, the only principles worth following.